Hi, everyone. I hope that you are joining the right session, just so that you know where you are. This is the next generation of impact philanthropy. We're going to talk about catalytic capital today. And as we move forward, we're going to continue admitting people. But for now, I want to wish you all a good day and welcome you to our session. So for today's session, we will be discussing both the definition of catalytic capital, as well as showcasing specific local and global case studies from across sectors and verticals. So I hope you'll all find a way to connect to that. And finally, we hope to leave you with a call to action, because we don't want this to just be a theoretical discussion. We want you to really come out with practical tools and ideas. During our session, I would also encourage you to ask questions through the chat, so you can send us that. And importantly, I'll encourage you to ask yourself what we've all been asking ourselves all the time, which is how can I personally strategically create, leverage, and implement meaningful opportunities for catalytic capital. I would start the introductions now. So my name is Alina Shkolnikov, and I'm the head of impact innovation at the Edmond Rothschild Foundation in Israel. The foundation is a leader of Israel's impact ecosystem. And as Eli Buch, our head of philanthropy, mentioned in his opening remarks, we've been implementing catalytic capital from 1962. And I would love to start the introduction of our distinguished panel. So Deborah Schwartz is the managing director of impact investments at the McArthur Foundation, a global philanthropy headed in Chicago, Illinois, and a longtime leader and a very inspirational leader in building the field of impact investing through partnerships, innovation, and support of the networks such as the GSG, the GIN, and others. We're also joining us today is Yaron Neudorfer, founder and co-chair of the Israeli Forum for Impact Economy, which is hosting this conference together with Tech for Good. And Yaron is the CEO of Social Finance Israel, a leading organization in Israel's impact ecosystem. And of course, Dalia Black, a founder and CEO of Weave Impact, a leading advisory firm specializing in impact investment strategies and portfolio management for family offices, foundations, and corporates. So we're all looking forward to hearing from you. And to start us off for our session today, I would love to welcome our panel's keynote, Deborah Schwartz, to help us define the term catalytic capital, set it in a historic context, and share with us from her vast experience at the McArthur Foundation. Deborah, the stage is yours.
Thank you, Alina, and it is wonderful to join everyone in the virtual world for this fantastic gathering. It's just really impressive to see all the people that have gathered together, and I do wish it was in person. It's a little disorienting because I have a feeling there's a whole bunch of you joining us for this breakout, but I have no idea how many there are. Oh, I can see actually 67, so that is pretty exciting. Let me take just a couple minutes to talk about catalytic capital, set a little lay a little groundwork for our conversation. Really excited to hear the examples that my fellow panelists are going to share in a minute, and I will offer some from our own experience. But you see here just what I've put together as kind of the simplest way to boil down a definition that you can find in a report I'll show you in a second, but the definition is like 4 lines long. It's hard to put your head around it in a nutshell. So catalytic capital, and this is according to how the McArthur Foundation and some other foundations that we are partnering with define it. And let me say right up front, like impact investing, this is not something with hard and fast boundaries around it. And you may have your own definition that's different. And part of why this session is so important and the GSG is so important is that this needs to be a conversation and a collaboration among all of us who care about driving positive change. For our purposes, catalytic capital starts with conventional financial instruments, a loan, an equity, LP stake in a venture fund, and so forth. McArthur and some others have used guarantees quite a bit to provide catalytic capital. We've even used bank deposits with funny features to make them catalytic. And that's the next part, unconventional terms. What makes an investment catalytic is that the investor very deliberately either stretches out the maturity to be more patient, takes on a risk that a conventional investor might not take. Think early stage investing, provides some flexibility to the entrepreneur or the fund. And in many cases takes on a concession, what is considered a concessionary rate of return, a lower rate of return for the level of risk or a higher level of risk for the level of return. Either of those would be concessionary. And often we see a mix of unconventional terms, and we can get in later to some examples of what that looks like. But think flexible. I think conventional investing tends to be driven by norms and standards and benchmarks and practices, in the ways that banks and others lend. Catalytic capital is about stretching the boundaries, extending the reach of the impact investing that we do by being more creative and flexible. And that's the end product, is something that is truly catalytic because it bridges a gap. It brings capital to a market that it wasn't reaching before. It solves a very targeted problem around education or health or climate. It's fueling innovation, and that's so important in the context of the Israeli impact economy. And it has the ability to make things more investable, either by directly de-risking them or allowing them to grow, build proof points, build a track record. And ultimately, it not only unlocks an impact that wouldn't be possible, it's unlocking other capital, either right at the same time through what we call a blended finance structure, or over time by allowing something to get through the early stages of development and become more investable down the road for less risk-taking investors. I'll leave you with one last thing to this definition piece. We sometimes use the phrase, but for investment. It's the unlocking. We sometimes think about a puzzle piece almost. It has this quality of without this piece of the puzzle, you can't get to an investment solution. So usually catalytic capital is not the whole story, but it is a critical piece. It is a catalytic element. Ben, really quick, we'll just jump through 2 more slides. I want to really emphasize that catalytic capital sits on a spectrum of investment and capital. Again, earlier in the opening, we heard it's not a new term. This is something that foundations in the United States have been doing, in our case, for almost 40 years through something called a program-related investment. When you think about the spectrum of impact capital that you see here, ranging from what's called responsible or sustainable investing, and is usually about screening out stocks that are in companies doing things with tobacco, for example, that's a practice that goes back investing-wise to the 1700s, at least in the US context. So there's a long history around all these things that we now see as impact investing, but I think there's a level of purpose and cohesion and energy around it today that is just unprecedented. So catalytic capital on the spectrum is the closest to true traditional philanthropy, grant making. It sits right at that juncture and is part of this larger sweep of investment approaches. Let's go to the last slide. If you want to know more, Ben, can we go? Yeah. If you want to know more about impact investing and catalytic capital and how those pieces come together, I invite you to check out some of these resources. I'll put some links into the chat when I'm done talking, because I realize now I do not know how to post and talk at the same time, which is probably a good thing. But there are increasingly a set of information pieces out there. We're actively with our partners funding some of this work to make sure that investors have more tools available to them. And the last slide is, if we can go to last slide. Oh, that's interesting. Can you go to the very last slide? Go to the next one. Thank you. What I want to leave you with is that one of many things that the McArthur Foundation is doing in the impact investing arena, and we work in partnership with our own programs. We work on climate. We're working in our hometown of Chicago. So we have quite a few things that we're doing, but the biggest is the Catalytic Capital Consortium. And I think it's through that we're able to do grant making to support some of the knowledge pieces that I mentioned, and we hope to fund a lot more over the next few years. And it's through this consortium with Omidyar Network and Rockefeller Foundation, we're doing the grant making, And then through our own resources, out of our 500 million that we've dedicated to impact investing, we're investing up to 150 million in a set of funds around the world. 6 are on our website for you to review. I'll talk about one a little later. But we do expect almost 10 to 12 funds when we're done. Thank you. I hope that wasn't too long, Alina. I know we're running.
That was great.
Okay.
Thank you so much, Deborah, for setting the stage for us and really putting us into the right atmosphere. And then now to bring us into the Israeli context, Yaron, if you could please help us get a better understanding of what catalytic capital looks in Israel, and specifically through your vast experience with SFI and bringing social impact bonds to the Israeli ecosystem, to talk about that tool as a multi-stakeholder environmental opportunity.
Great. Thanks, Alina. Thank you, Deborah. It was really, really good, and it set the mood for everything that comes after. So great to be here this afternoon. I want to talk about a perfect example of catalytic capital, or a PPP, I would say public-private partnership tool within the impact investment sphere. I'm talking about social impact bond, or the way it's called in the US, which is a much better name, Pay for Success project. In the Pay for Success project, we really aim to solve the very basic and direct social issues, such as type 2 diabetes, such as employment, which is very, very much in need these days with COVID-19. So employment issues, healthcare, welfare, and education issues. And the way it works in just 1 minute is that you raise a fund, you raise money from impact investor. You saw maybe you can put it on the screen again, this spectrum that Deborah showed before. You raise money from impact investors, and you use the money you raised to tackle a social issue that has a very, very clear set of objectives you need to achieve, clear set of predefined goals. And if you do achieve these goals, someone, and I will talk in a minute about who is this someone, will pay back investors according to the level of success that's been achieved. There is a price tag for each success. So the more successes we have, the more return to investors. Who is this someone that cares to pay investors back? It's usually the government. Why would the government do it? Because the government gains some sort of economic benefit in being able to solve this problem. In this, we see now a very big rise of social impact bonds in the world. We see over 200 SIBs in 29 countries. We have 5 social impact bonds in Israel, and many more in the pipeline, as I said earlier in the opening remarks. But I want to talk about really the use of catalytic capital here, because what do governments usually do? Government usually put up a tender in order to tackle some social issue that they want to grapple with, and then they select the winner, they pay them the money, and they hold their finger crossed in order to get what they wanted they're going to get. Sometimes you do get it, sometimes you don't get it. Here you shift the risk from government and taxpayers to investors. Now, who are those? What are the investors? Exactly the type of people who know how to manage risk. So basically, when you pay for success, you only pay for the successes or the benchmarks that you hit and the predefined goals that you met. Then you shift, the government only pays after you achieve the success. If there's no success, then the government doesn't pay, and the investors lost part or all of their funds. So basically, first you shift the risk to investors. The second thing is that from our experience here in social finance Israel, we witness a totally different mindset when you do a social project with investors' money. Your commitment to results is much, much greater. I mean, you do everything you can in order to achieve those results. It's very different from what you do with the philanthropic funding or with government funding. So the commitment to results is the second point. The third point, and I think Deborah mentioned it, is really how much innovation you achieve. When you need to achieve those results, and when investors are, breathing in your back, you seek all kinds of innovative ways and innovative interventions, and you're able to take more risk in achieving more and introducing more innovative approaches in order to achieve those results. The fourth point is about measurement. Sometimes when we go to the government and tell them, listen, let's do a project of pay for success. Immediately they go to the table and think what is the definition of success. But the next thing they do is how do you measure success? And this is something that is not always present in the social areas. Not always measurement is not always present there. Here, if someone has to pay for success, they need to be able to define and measure success. And I think that the fifth point that I want to mention here with the social impact bond is really the ability to have multiple stakeholders. And what am I talking about? I'm talking about the ability to introduce more than one funder or a group of investors or co-investment strategy into one social impact bond, into one social issue that's being dealt with. The ability to introduce multiple service providers. You don't need to use only one service provider. You seek to have more strategies, more innovation, more technology in order to be able to solve more or to solve better the issue. And the third aspect of multiple stakeholders is really the outcome payers, the government agency that pays for outcomes may be more than one government agency. So you can solve problems that are across multiple ministries, such as Ministry of Healthcare together with the Ministry of Education in terms of dealing with young kids, kids in kindergarten school or well-being, for example. So multiple government offices can participate and partner on solving and paying for success for the same issue. So I think this tool is one of the great innovations we're working on. We have, as I said, 5 social impact bonds now in the country. We're working on many more. One of the most interesting ones that came to life during COVID era is really the social impact bond to reduce elderly isolation. So it seems that we did the right thing and we came up with a great solution. I'll tell you a secret, we started to work on it well before the first person dealt with the bat, and well before none of us heard about COVID, but now it's really in need. And if this is successful, it can be scaled up and replicated not only in Israel, but worldwide. So I'll stop here, thanks.
Thank you so much, Yaron, for walking us through the public sector point of view. Dalia, if you could please share with us from your experience and your work, the more private sector point of view on Catalytic Capital and how that is manifested. Thank you.
Sure, with pleasure, and good afternoon. It's a pleasure to be here in such a great company. So having introduced this subject at the Delek Group over 10 years ago when it was such an unknown new concept, I'm really excited to be here today to talk about the significant positive shift that we've seen in corporates' attitude towards impact investing in the last few years. So before we talk about Catalytic Capital, just for a moment, I want to mention the models that corporates are using for impact investments today globally. There are 3. One, and this is the same, corporates, private impact investors, foundations, opportunistic, easiest way to get involved. A deal meets financial criteria, it's in line with your social goals. You invest without a particular defined strategy, but you jump in and get your feet wet. And we see this with the banking sector globally, that nearly all the banks today globally have made impact investment. And in Israel also, without any particular strategy, most of the banks have made an investment at some asset class. The second approach is what we call internal. So many of you will have heard of IKEA's investment strategy, Patagonia, Pfizer. These are internal impact investment strategies where the most relevant for our discussion is Danone. Now, Danone, one of a number of impact funds that they've created is called the Livelihood Funds. They invested in rural communities and looked to secure an ethical supply chain for their own needs. Now, once it was established, Danone took the fund out of the corporate and opened it up to additional corporate investors. They now have over 10 additional corporate investors, such as Hermes, SAP, and Michelin, in a $30 million impact investment fund, which has obviously been very catalytic. And this is exactly the third approach where we see the growth of catalytic capital amongst corporates. A corporate establishes a fund that sits outside of the corporate. So for example, Shell in the UK, the energy company, has Shell Foundation that has made over 40 investments with a focus on affordable energy. Now, they are using exactly what Deborah described as unconventional terms. They have made first loss capital investments, they've taken junior positions in large funds, high risk, direct early stage investments with a conscious goal of playing a catalytic role at the early stages. They've created a high quality pipeline and they then open it up for additional investors. And if people are interested in this sort of model, I suggest looking at Salesforce Ventures, who are doing the same for workforce development, and Sky Ocean Ventures of Sky Media that are doing the same for the plastic crisis. And there are a host of other impact funds growing out of corporate. Now, with regards to Israel, other than the banking sector, it does remain quite a nascent concept. The sector that we see beginning to emerge as a real leader is the food sector. So we have Strauss, Tnuva, and Tempo all funding food tech incubators in Israel, where they're funding startups in the very early investment stages and trying to take them past the valley of death, where they can then receive more classic venture funding, again, touching on this area that Deborah spoke about, having more patient capital to try and get these startups to a point where they can have more classic capital.
Super, super interesting. Thank you so much. And I would like us to dive, so we went from the macro, let's go to the micro. Deborah, if you can give us a quick example of really something that you think is an exceptional example within this field that will help us get a better understanding of what that looks like in reality.
Okay, if you don't mind, I want to give two examples. I'll go short on each just because I think they're two different aspects of catalytic capital, with a third being the social impact bond examples that we've already heard. So one is a blended finance structure, and I'm going to use both US examples for now, but we have international examples in our portfolio, as does the Omidyar Network, the Rockefeller Foundation, and others that have been working at this. So one is in 2005, we created a fund in New York City because there was an affordable housing crisis. There is still an affordable housing crisis around rental apartments that were aging and needed new ownership and were at risk of being flipped out of the affordable industry into high-end rentals. What the solution was to create a fund. It still runs today. It's mobilized over $400 million successfully. None of the catalytic capital has been touched over that time, but there were 7 foundations that came together, and then 2 agencies from the city of New York, so the public sector, the government, they sat at the very bottom of the capital stack. The foundation money was in the next lost position, and then 20 plus financial institutions came together. And that's how we created this pool of $200 million that was doing a type of lending to nonprofits and to other housing developers that was considered high risk. It was a gap in the market. And just emphasizing something Dalia said, there's just super laser focused intentionality around filling a gap, solving a problem that the market just wasn't going to solve for a whole bunch of reasons. Because sometimes these gaps don't go away. Sometimes they're like that. If there's low income residents and difficult neighborhoods, the economics may not be attractive, especially if they're trying to keep the rents affordable. So that's a blended finance example. And Convergence is an amazing resource to learn about blended finance internationally. A more recent example for us is in the climate space. It's part of the Catalytic Capital Consortium. It's called the Prime Impact Fund. That was not a layered deal. Every investor in there is being catalytic, and there are something like 76 small investors, first-time impact investors, first-time climate investors that have been able to come together in this vehicle. It's described on our website, but basically it's focused on the valley of death, and it's focused on technology commercialization in a sector where you've got outsized technical risk, You've got very long time frames to get to viability and high capital intensity. A whole bunch of problems creates a financing gap. That's where the catalytic capital comes in. And then if they are successful, they will make those technologies, which they hope have gigaton scale greenhouse gas mitigation potential, they will become investable down the road. So one is vertical leverage and unlocking. One is more of a horizontal strategy of starting with something early stage and making it investable over the long term. So we're very excited about Prime Impact Fund. I'll post a link to the fact sheet in the chat.
Really, really great examples. Dalia, can you give us one of the examples that you like really as a highlight of the Israeli ecosystem?
Sure. Well, it was hard for me to pick. I'll take Ogen. So for those that don't know, Ogen is a $50 million loan fund for small businesses and NGOs. And within the loan fund, they have structured a bond. So not a social impact bond, but a bond known as structured debt. And they are using catalytic capital at the core of the design. So there are 4 tranches where the investor can decide on the tranche based on the type of risk appetite they would like to take, where the riskiest tranche will be taken by philanthropy, it will be grant capital, and they will be covering the default, an element of the default. And the second riskiest tranche has already been taken by a private impact investor. And the combination of the capital from those 2 risky tranches has increased the attractiveness of the offering for Israel's institutions. So a very good example of using philanthropy to create catalytic capital from a grant perspective. And as Deborah said, I'll also post Ogen. And can I have 1 minute to share another example?
Yes.
So I wanted to mention that since we're talking about a philanthropy, that it's not necessarily the philanthropist that's the lead, but it can be the philanthropist that is piggybacking onto the back of a catalytic investor. And if we take the example of Ampersand, which is a social business here in Israel dealing with employment, 2B Community, the impact fund, they invested half of a round, but they created the round in a way that made it very easy for smaller philanthropic investors to join. And so, for example, UJA, the UK charity, piggybacked onto that round, and it was a much easier impact investment for them because the capital had already been provided by a more experienced, larger patient investor beforehand.
Thank you so much. Yaron, I know it's difficult to choose between all of the SIBs because I'm sure they're all your favorite, but if you can give us one example of a specific dive into your, I don't want to say favorite SIB, but one that you like a lot.
Since I do not differentiate between all my kids, I will take a different example. And I want to talk about an NGO in the urban renewal sector, which is called Jindas. And we have the CEO of Jindas here with us, I believe, in the room. Basically, Jindas has embarked on a very, very inspiring project to take, I think, one of the lowest low neighborhoods in Lod, which is not a very rich city, to say the least, and change it dramatically. Today, there are 63 units there, and they want to build over 540 units in this neighborhood in Lod, which the problem is that the land value in this neighborhood is so low that it doesn't pay for no real estate entrepreneur to start something there. So this could be the same forever. What they did is they used 4 different layers of funding in order to be able to achieve a good enough return for the entrepreneurs to start the project. And so the lower layer is government money, and the government enabled them to take 10% of the units and make it a long-term rental units in order to keep the residents the old residents in the neighborhood and build them a totally different neighborhood with totally different social services level. The second layer is layer of philanthropy that enables to give those social services, building a community center and schools around all the real estate project. And then two layers of impact investors and regular investors. And this drove, I think, the possible return to entrepreneurs from something like impossible or zero to the neighborhood of 18 or 19%, which is feasible enough to start the project. We're talking about not small money. We're talking about around 800 million shekels project. So here is how you use catalytic capital, multiple layers in order to be able to start a project. I think one of the best things is to be able to replicate it in other neighborhoods in the periphery of Israel. And I invite you to reach out to Vital and ask her anything you want. And thanks.
So you've heard great examples here from the panel on both different asset classes and different verticals. I think this really gives a wonderful example of how catalytic capital can be so vast and really influence both different social areas and environmental areas, as well as bring in different multi-stakeholder environments. And so I think that with the understanding of what it is, I would like to ask the panelists to really give you a call to action. I think that when we do these panels and these conversations, it's an opportunity not just to share from our knowledge, but also to really leverage the room and have a call for action. So Deborah, if you can start us with a call to action.
Okay, so I'm going to cheat again, Alina. It's two parts. The first part is just do it. Don't let the perfect be the enemy of the good. There are a lot of questions. That's why we and others have come together to fund knowledge, academic work and case studies and research, and we hope those things will be available and helpful. In the meantime, there are worries. Am I cross-subsidizing? Am I unduly subsidizing private party if I do a concessionary loan? That's a hard question. There are other kinds of questions, and I think the important thing is not to let that stop you. Reach out to us at McArthur or at other foundations that are involved. Reach out to your colleagues here in Israel who are really experienced, but just do it. Do something, jump in, find an intermediary, perhaps, as Dahlia suggested. That can be a great way, great avenue in participating in a transaction with others. But it is a phenomenal way, not necessarily to replace your giving or to replace your investing, but to deepen both and to be a good complement. It allows you to have all the tools on the table that we need for the kind of impact we seek. And my last piece is don't forget policy. So groups like the NAB and GSG are so important, and we fund them because we know that in our own country, the history of catalytic capital is linked together with the history of policy change, like the Community Reinvestment Act, the creation of the Community Development Financial Institutions Fund at Treasury, the creation of programs like the New Markets Tax Credit. And some of these financing tools can make you crazy because they're highly complex and expensive to implement, but they fill gaps. They're part of the catalytic capital story, and we need them, and we need the incentives that they create for other sectors. So just do it and remember policy.
Wonderful. Yaron, our call to action.
First of all, I must thank Deborah. You're really inspiring, Deborah. I met her 3 years ago in the GSG conference in Chicago, so in your hometown. And since then, I've been planning and fantasizing having you in our panel. Here we go. Secondly, I'm not going to talk about catalytic capital now because I wanted to open the lens wider into impact investment. And my call for action is for each and every one of you people in this session. When the next time that a representative from a pension fund comes to you and offers you some sort of a pension scheme that you pay less management fees, etc., forget management fees. Ask them if they have a pension fund, a pension scheme that is impact oriented, that you know that your money is going to be invested only in things that do good, or at least not in things that do bad. This is the real revolution. This is where the big money is. In Israel, pension fund and institutionals accrue for 2 trillion shekels. 2 trillion shekels. Let's take a fraction of it into impact investment. It will be enough.
Dalia.
So my closing words are like Deborah, just jump in, even if you don't have a large amount of money, even if it's philanthropic completely and you only have access to grant capital, whatever it is, jump in. And if you can't take risk, as in using the catalytic capital, then piggyback on somebody who can. That is exactly the point. That is what this capital is supposed to do, to bring you with whatever access to capital you have into impact investments. And Israel has some really great opportunities. You've heard just a few of them today, but we have opportunities across all asset classes. So we're waiting for you to come join us.
So I'm going to jump into all the calls for action and add my call for action as well, because I think that this is really a great opportunity for us to engage more people in catalytic capital and in impact investing and innovation in general. I would encourage you to learn. I think that all of the panelists here have shared really, really amazing resources with you. You can also learn from the Edmond Rothschild project. I think there's a lot of great work being done today in Israel and around the world, of course, where you can look at case studies that are relevant to you. They're relevant to the work that you're doing, to the social change that you want to make, or to the risk that you are willing to take upon yourself. So first, learn more about this and engage with us. We're happy all to share our ideas and our knowledge and our experience, and mainly our resources, because a lot of us are doing a lot of, as organizations are doing a lot of work to try and really bring forward catalytic capital in this impact ecosystem. And the second thing that I would call to action for, I'm taking from Deborah the two at each. So my second call for action is going to be to really think about full cycle solutions. Think of how you create more supply and demand and intermediation within the work that you are doing. There's really need for cohesion in our Israeli impact economy. And I think that that's an opportunity for all of us to think where we see unique value propositions for different organizations. And on that note, I'm going to thank our absolutely magnificent panel. I have to say that for me, this was really fascinating, and I'm honored and humbled to be on a panel with speakers that I absolutely admire. I would like to thank Deborah Schwartz, Yaron, Neudorfer, and Dalia Black for taking the time and being with us and sharing from your vast experience. I would also like to thank Ben Wasserman for taking the time to being our tech support for the day and doing all of our prep. And of course, IFIE and Tech for Good for hosting the summit. And I would encourage you all to stay with us and go back to the main room. Ben is going to show the link here, continue the chat, and then join us in the virtual room. Thank you all so very much.
Thank you, Alina.